Lennar, they build homes. What does that mean exactly? Well, maybe we'll find out more details today. Let's just agree that I don't know how to pronounce things, but for the rest of the video, I'm gonna say Lennar Homes, Lennar Corporation. This video is going to be structured the same way as all my videos so that you can navigate it in whatever order you're most comfortable with. We're gonna have an opening move, then transition into gathering facts. Eventually, I'll transition to unraveling the story behind the numbers. And then finally, we'll call in the Sage Seeds AI in order to give us a sort of helpful ranking. Lennar is going to be the 45th company in the 2022 season. So while you're following along, try to guess if this is gonna land high in the rankings, low in the rankings, top 10, bottom 10, somewhere in the middle. Timestamps are in the description. Let's dive in so that your wisdom can blossom. A routine opening move is going to be the financial statements in the item 8. The auditors made a note about how Lennar is sharing its interest in subsidiary type businesses. I don't think we're going to have to look into it, but you never know. The rest of the audit is there for us to look at if it becomes relevant. Please check out my starting guide if you haven't so far. First off, we have this consolidated balance sheet. Cash has gone lower. Receivables have gone up, inventories have increased. Now this paints a picture of a business that probably didn't have the best year. Some of the managers in this corporation a little bit frustrated with how the year went, just from what I'm seeing here. The ratio of assets to total liabilities has gone to be just under 3. That is pretty high. Most of the assets are inventories, and for this business, about half of its inventories are finished homes and construction in progress. Maybe Lennar wants to have over 10 billion, yeah, that would be billion, in finished homes that it hasn't sold. Well, we're gonna have to see. This seems like a lot of houses with no one living in them. Then they talk about the affordability crisis. That's not Lennar's fault. Hopping over to the income statement, we can see growing revenue, healthily growing revenue. Compared to 2 years ago, they're making 11 billion more on the top line. And their expenses has only gone up 7 billion. And so, yes, that is an extra 4 billion in what would be pure operating profit. Nothing to scoff at over a 2-year period. That is quite healthy. Now, weirdly, they have some unrealized losses from technology investments in the latest year. I'm not sure what they could be referring to there, but maybe we want to look into it later. Overall, despite the increase in operating profit, their bottom line, their net income has just barely increased. I mean, I say barely, this is $200 million increase. That's a lot of money. But relative to how much revenue grew, which was over 10 billion, to only make an extra 200 million, kind of unusual, to be honest. Hopping over to the final financial statement, the cash flow statement, we can see some reasonable depreciation. Here they've named other unrealized gains losses. It's quite significant. It's about 8 times higher than depreciation expense for the latest year. Quite significant. The bulk of this was that technology investment they were talking about. Under cash flows from investing activities, looking for more information about these technology investments, they have investments in and contributions to unconsolidated entities. This is the exact wording that was used in the auditor's objection at the beginning of this item 8. Nothing else, none of these other rows are mentioning anything that could be related to the technology investment. There are other things like mortgage-backed securities, all these other things. It's really, this row could be the only thing that could be referring to a quote-unquote technology investment, and it is pulling us back into understanding the auditor. And so we're going to head back to the audit as we transition from the opening move to gathering facts. The auditor says certain of the company's investments in unconsolidated entities have complex structures and agreements which need to be evaluated for consolidation, including whether the joint venture is a variable interest entity. Now, a variable interest entity usually means an international subsidiary in a country where foreign investors are technically not allowed to own companies. How many countries are like that? Honestly, not a lot, with a noticeable exception being China. Now, I don't know if Lennar has anything to do with China. The auditor is basically saying anything that has to do with the unconsolidated entities, it may not be clear that this is a relationship that will be basically respected, is the quickest way to say this. It's more complicated than that. There's all these legal evolutions happening in the world. If you own a variable interest entity, you don't own profit. You own the right for the government to not tax you. And that is the correct way to think about it, because in the West, a lot of times taxes happen after operating profit. In a communist country, it's the opposite. Operating profit happens after taxes. And depending on what the society of wherever this subsidiary is in requires in terms of revenue for the government, that is prioritized before the bottom line. Not good or bad, just a different culture. And the auditor here is saying this very different type of enterprise is not necessarily coming off as that different in the way that Lennar is presenting. So the auditor would like it if Lennar would do more to highlight that certain unconsolidated entities really should not be thought of as subsidiaries, because they're not. Going down to the notes of the item 8 and continuing to gather facts, there is a whole section called investments in unconsolidated entities. Now, what I'm hoping to do is to connect the unconsolidated entities to that technology investment that we saw in the income statement. Let's see if we can do that. Now, most of this is kind of just legal hope. Now, it's very nice that they include this. The auditor specifically was saying that even with this note, it's not really clear, and basically just hoping that a VIE will play by the same rules as a subsidiary, even though we know for a fact that they don't. Just the whole point is that if it were subsidiary, it would be called a subsidiary, not a variable interest entity. We're continuing to look for technology investments. Aha, we found it. In the item 8 still, there's a section called Lennar Other, which is, we weren't going to find that, so I had to Control F for the word technology. Lennar Other primarily includes strategic investments in technology companies. A bit of an investment fund hidden within the home building business. And some years it's making hundreds of millions of dollars. In the latest year, it lost hundreds of millions of dollars. So several companies, it seems like based on the names, many of these would be home related, and the changes in fair value are recognized annually through earnings. Investments could be terrible, they could be wonderful. Paying attention to the change in fair value is not necessarily the best. You really would want to kind of understand, are these investments thoughtful? More importantly, is there any strategic reason for some of these investments? Let's look at the latest mark-to-markets. I mean, here you can see that some years, like taking Hippo for example, some years it increases by 200 and then it goes back and even dips a little bit lower. These numbers look scary, but really what you should be seeing is because of the annual ticker, it's looking like these dramatic swings. It's actually not that dramatic. Just accounting practices having a bit of an oddity. So the biggest impact last year came from Opendoor. Now in the item 1, a section called Strategic Technology Investments. These investments help us enhance the home buying or home ownership experience, reduce our selling general and administrative expenses, which was growing dramatically less than revenue, by the way. So that is actually happening. It makes sense. And help us stay at the forefront of home building innovation. Okay. Opendoor, we could look at any of these, but just to simplify, we're going to look at just a random example. A company that uses technology to significantly streamline the home buying and selling process. When we were seeing that there was a gain of about 200 million 2 years ago, that was the year that Opendoor went public. Hey, if you're getting more comfortable uncovering the stories behind the numbers, please like and subscribe. And then in the year after the IPO, it has then kind of balanced out to what was originally the IPO price. And so not very scary at all. Let's go back to the income statement, because these numbers here are basically the whole thing we saw on the income statement. With the additional context we have, we're back to the income statement. We can see revenue here increasing, total costs and expenses increasing by noticeably less, yet the overall net earnings being almost the same compared to last year. The difference is entirely explained by these two numbers, which are unrealized gains and losses from technology investments. We now know that investments that were private became public companies. As a result, investors piled in the public markets and raised the value by about this much amount. Now, is that justified or not? We have no idea, but that's what this is explained as. Then, a year after the IPO, those same companies balance out their price, which happens a lot in public market. These look like dramatic numbers, but really what we should do is subtract about $500 million from this number and add about 0.6 billion to this number. If we do that, then a more normalized quote unquote net earnings would be 3.9 this year. So we go from 2.4 2 years ago to 3.9 to 5.1. That is actually pretty consistent, and what it paints is a picture of a company growing by about $1.5 billion in pure profit every year for the last 3 years, and that is a substantially more accurate representation of what the Lennar operating business is doing because of generally accepted accounting principles. I think anyone thinking about investing in this company would benefit from understanding this change. That's really the story behind the numbers for Lennar Corp. How confident are you that you guessed the ranking of Lennar? Again, apologies if I've mispronounced this. I don't know why this word in particular is proving so tricky to pronounce for me. But there's going to be 45 companies in the ranking. SageSeeds AI is a collection of value investment calculations using artificial intelligence in order to simplify it to a ranking. It is not investment advice. Part of the reason for that is that it does take into account market price, as when I'm making this video. Of course, market price is fluctuating, and so you should not take one moment in time and extend that to be general investment advice. However, I find it quite useful to have value investor wisdom distilled to the output of an AI. Please like and subscribe. Consider sharing these videos. Consider checking out the starting guide if you have not. Maybe someone tell me how to pronounce this company's name before I continue to double down on what I'm really unsure about. Share your wisdom, share this video. Lennar, I should say LEN, is ranked 8 out of 45 in value for the 2022 season, making it into the top 10. Not quite in the top 10%, but objectively in the top 10 of what we have so far. Now, I'm going to interpret what the AI seems to be picking up on, and it really seems to be liking how low capital expenditures are for this company, especially relative to it being a company that makes billions and billions in profit. There really aren't any years where capital expenditure is over 100 million. And so really simplifying that down, the AI likes the financial value situation in that. Very efficient use of capital expenditure for this business, and that really seems to be overpowering what is showing up in the net income statement as just kind of random fluctuations in technology investments. Trying to understand if those technology investments really are transforming the home building business in any way. That seems to be what Lennar was focusing on. But whether they are or they're not, the AI still is seeing something attractive here, as shown by this relatively high ranking.